Hey fellow tech heads, finance fans, and number nerds. Hope you all are doing good. Today we're diving deep into Oracle's Q4 and full year FY25 earnings. And spoiler alert, it's a cloud party over at Oracle HQ, and everyone's invited. From booming infrastructure numbers to some eye-popping multi-cloud deals, this is not your average, boring quarterly earnings report. So sit back, grab your coffee or your calculator and let's break down what Larry Ellison and team have been cooking. Let's start with the big numbers. Oracle reported $15.9 billion in total revenue for Q4, which is an 11% increase from the same quarter last year. Not bad for a company that used to sell database licenses like hotcakes in the 90s. For the full fiscal year, Oracle pulled in a cool $57.4 billion, growing 8% YOY. And get this, almost $44 billion of that came from cloud services and license support alone. Yep, the cloud isn't just floating its raining dollars. Oracle's CEO Safra Catz isn't shy about the future either. She boldly said FY25 was very good, but FY26. Expect dramatically higher growth. Dramatic, like a soap opera, but with servers. Alright, now let's split the cloud in two. Cloud infrastructure, IaaS, revenue hit $3.0 billion in Q4, that's up 52% year over year. That's the kind of gain that makes even AWS glance over and go, wait, what's in their coffee? Cloud applications, SaaS, revenue also rose to $3.7 billion, up 12%. Zoom in further and you'll see. Fusion Cloud ERP revenue, $1.0 billion, up 22%. NetSuite ERP revenue, $1.0 billion, up 18%. Looks like Oracle isn't just renting out clouds, it's selling enterprise jetpacks to ride them. On the profitability side, Oracle is printing Benjamins. In Q4, GAAP net income, $3.4 billion. Non-GAAP net income, $4.9 billion. GAAP EPS, $1.19. Non-GAAP EPS, $1.70. Margins? Still looking sharp. GAAP operating margin, 32%. Non-GAAP, a solid 44%. Operating income rose to $5.1 billion, GAAP, and $7.0 billion, non-GAAP, showing that Oracle is managing its ballooning cloud business with some financial discipline, and probably a few giant spreadsheets. Now, let's talk cash flow. Oracle generated $20.8 billion in operating cash flow for the year, up 12% from last year. Sounds amazing, right? But wait, here's the plot twist. Free cash flow for Q4. Drumroll, a negative $394 million. Yep, they went from cash-generating beast to, hold up, what just happened? The culprit? Massive capital expenditures, which hit $21.2 billion for the year. Oracle is spending big on building new data centers, because hey, if you're trying to be the king of cloud, you need more castles in the sky. Let's get to one of the most exciting parts of this report, MultiCloud. Revenue from Oracle's MultiCloud services, running on platforms like Amazon, Google, and Azure, grew a staggering 115% from Q3 to Q4. That's like doubling your pizza order and still finishing it before halftime. They've got 23 multi-cloud data centers already live, and they're building 47 more in the next 12 months. Why stop at a cloud? Oracle's building a whole sky. Meanwhile, their Cloud at Customer offering, which lets clients run Oracle's cloud in their own data centers, saw revenue grow 104% year over year. That's like having a cloud but with the keys in your own pocket. Let's peek under the hood on expenses. In Q4, R&D spending, up 19% to $2.65 billion. Sales and marketing, up 9%. G&A, up 16%. But it's not all cost inflation, amortization of intangibles dropped 27%, and acquisition costs fell 96%. Which means they're not currently on a shopping spree, no big billion-dollar acquisitions for now. Oh, and stock-based compensation? A healthy $1.3 billion for Q4. Gotta keep those engineers happy, right? Cloud architects don't come cheap. How's the financial health? Cash on hand, $10.8 billion. Debt, $92.5 billion combined short and long term. Shareholder equity, $21 billion. It's a classic Oracle move: take on debt, invest aggressively, and return cash to shareholders through 50 cents per share dividends and stock buybacks. It's like running a tightrope between Wall Street love and long-term strategy. Now for the crystal ball. Safra Catz is bullish on FY26, projecting total cloud revenue growth to accelerate from 24% to over 40%. Infrastructure cloud, OCI, growth to leap from 50% to over 70%. And RPO, remaining performance obligations, to more than double. So yes, Oracle is loading the rocket and preparing for liftoff in the cloud wars. AWS and Azure, watch out. There's a third cloud cowboy in town. So to wrap it up, Oracle crushed it in Q4. Cloud growth, especially in infrastructure, is on fire. Cash flow strong, though free cash flow dipped thanks to heavy investment. MultiCloud is the new buzzword, and Oracle is doing it big. FY26 could be their breakout year in the cloud. Whether you're a long-term investor or just here for the earnings drama, Oracle's story is unfolding fast, and they're not just chasing the cloud dream, they're building it, brick by digital brick. Smash that like if you learned something new, drop a comment if you think Oracle can take on AWS and Microsoft, and don't forget to subscribe for more earnings breakdowns, delivered without boring you to sleep. And before I let you go, one quick but important thought. Tech is advancing at lightning speed, but let's not forget our roots. Literally. Planting trees isn't just about shade or aesthetics, it helps cool cities, fight pollution, and give life to countless species. Plus, a clean neighborhood is like good code, efficient, smooth, and enjoyable to live in. So the next time you toss something, make sure it hits the bin, not the sidewalk. Be the change. Grow green, live clean. Because while Oracle builds the digital cloud, we still live under the real one. Let's take care of it. Thanks for tuning in. Until next time, stay smart, stay kind, and stay grounded.